Yo, yo, what's going on? How we doing? How we doing? Why don't we use this as a therapy session? Because I got some things to learn with that Trump basket today. Yo, Oliver. DJT was looking at prior day's lows in the 3450s, as that prior day low has held since right here. October 2nd, prior day low has held every day since. So once we broke that, I was looking to lean. I was starting in pre-market. I got that nice flush off the open. I started to rescale. And this last cover, I was just kind of, I don't know, it was just a random cover. But I missed this pull to low a day, which ended up squeezing all the way back out anyways and never seeing lower. So once I saw something like that on PHUN, I start covering dips as DJT is grinding back to highs. And I put too much weight on PHUN having to follow DJT. And this is what a chart like that looks like. Hurts to look at. I was cursing myself looking back at it right around here, because I get off desk around 10:30 to 11ish. So once I see it down here in the nines, I was not a happy camper. But I had messaged Nate about it, and he's like, I was asking him, like, what was the reason for continual scale when the whole front side of this move, it was based on DJT going higher. And he's like, that's exactly why I started scaling, why I kept scaling, because DJT rallied and PHUN did not. It couldn't bounce. As long as you withstood this squeeze back through high a day and didn't exhaust yourself there, there was no other bounce that would have stopped you out, and had relative weakness versus the sector. So live and you learn, but I definitely botched that A+ opportunity. So take some lessons from it and try to get better for the next one. And I traded LGCB, 2 cuts, quick cuts, pre-market. And then once we got this little fall through setup, scaled, covered, and got a decent little backside trade on that one. And then GNPX, I covered right off the open. They put out a press release that ripped the thing, so I covered the next pull, given that I wanted to focus on DJT and PHUN anyways. So plan yesterday was pops back into this 250 to 260 range. I got that early in pre-market, so I had put the position on there and was gonna let it work, and then I saw PHUN start pulling back. So it's so simple what Nate said, just didn't hit me in time. Yep, pretty much. Didn't hit me real time either, but I sure hit myself after I saw it after the fact. But if we traded perfectly every day, trading wouldn't be so much fun, because there wouldn't be new things to learn and new things to learn about ourselves and with the markets every day. So it is what it is. Try to move on to the next. But yeah, GMPX pops versus that 250 to 260 range stuffed. I got 230 covers, ended up going to $2, but that's all right. Will be a watch for a backside bounce tomorrow. Ideally, get a nice big gap down. Let me see here. I'm thinking back into this 250 to 260 is like potential reward. So I need this to get a pretty decent gap down risk reward wise. Otherwise would just wait till Monday. But if I can get a decent enough gap down and then opening range highs start to break, then that one is on watch. Oklo perked a bit higher than I was expecting, and this is another one of those ones where you get the push, hard crack, lower high, double top off the highs. This is a typical short spot, risking versus the highs, a scale using prior support as resistance into the 1890s. You get a massive flush, and once it's straight down, it's good to cover, but you basically use any prior resistance level. You're using pre-market levels, you're using high-a-day levels, and it squeezes out right through it just enough to stop you out, and then retraces right back to its lows. So that seems to be what's happening often, where you get PHUN pulls back, fails off looking left, and then a break of highs, and then that's the last move. So it's becoming a lot more common. And I think definitely something to watch when looking for these faders. OKLO hasn't bounced strong at all, so looking left on this 1760s range, the daily kind of tells the story, and if that level can give way, then I think you get a nice intraday trade at least for a pullback for $1 or so. LTBR, steady faders, steady lows, and now testing the prior breakout level. So same kind of thing as GenPex, weak opens that start to hold and use the breakout level prior resistance, ideally become support, and look for a bounce back towards 7 would be the goal. ALLK, possible little liquidity trap type chart, set price alerts over 130. Wicks on the top side, which I don't love. Usually love to see them on the bottom where weak opens get absorbed, but it's set a fairly clear level there at 130s. Would be a long through 130s, lock some into the after hours highs, and then ride a balance. And MNPR was the low float du jour. Bunch of people chasing this thing based off the recent drug move. So people are buying this one looking for the same thing. And nothing I'm looking to trade, but same kind of setup that GNPX did. And that one from yesterday, was it LRHC? Yeah, right here. This one ended up stuffing. But this one doing that sub VWAP trap, reclaim, and squeeze out into the close. So I won't be trading this one long or short for a couple days. It's just too wild for me. But if you can get pullback, something like this, 1-2 days, and start to play off some sort of support level for a bounce or a secondary leg, would be looking for something like this kind of structure on MNPR, but let it live its best life for now for a couple days. What else? I did forget to mention as well, my first cover before the open on PHUN, right here, I had started in pre-market and then covered on this flush, because this 9 a.m. print was a press release that the CEO retired from the company, left. So it was a negative pull, a negative reaction to that PR. And I was thinking maybe everybody hammered into it and was going to get some sort of squeeze out, which we got, and I waited for it to fail before joining some. But I think that was another notable sentiment shift. Not only was it red after a few days of consolidation, not only was it breaking below prior support in the 1290s, but also had a negative press release. Did you trade FISH? Oh, that was that backside bounce. Nope. That's wild. Like, I don't know. I'm getting frustrated with the way this stuff is moving right now. It's just being honest. It's driving me nuts. This thing trading 600,000 shares yesterday. Look at this opening action. Like, look at this. How am I supposed to buy this? Then you get one pop that takes this up 20 cents. It's just volume drives. Like, I don't even understand what is happening. Like, it blows my mind what's going on right now. You get all these high a day breaks where you used to be able to short gap downs, risk highs, and just ride the fade. You used to get actually decent volume on the backside that you could get some sort of a reliable price action to play off of. It's frustrating. It's frustrating me. I'm definitely not performing the way I was a few weeks ago. It's when that China stuff was going, like that sector momentum, I was trading. I was trading fine. I was when UXIN. I'm getting like daily chart, big picture patterns, parabolics, first red days, duo. You get this. This like even offered a nice trade. Tour right there, clean multi-day action with an overextension gap. PHUN, even in the large cap space, you get a big exhaustion gap with exhaustion volume. That sector made sense to me. And this recent stuff, like PHUN, was A+. This is something that I nail 9 times out of 10. And for some reason, like, we've gone over it the last few days, or maybe it was last week, where like you can get trades in the overall sector, and our job is to find the broken slot machine and what makes sense within that sector. And I'm focused on the DJT grind because this is the head of the snake. This is where I had most of my size. I didn't have crazy size on PHUN this morning. Most of my size was focused on DJT. And why? It's the head of the snake. I never focus on the leader. It's not nearly as extended and as A+ daily as this thing going from 6 to 14 when this one's going from 30 to 35. So where should my focus be is on PHUN, a sympathy play that you can get some sort of bias based off of how it's reacting to the leader. It's got plenty sufficient enough volume. It's more in my price range. The range is like a lot more expanded. It was just, I have no idea, but I don't know. It might be the frustration leaking into trades like this. But then stuff like F-ish, like I know I was watching it. I mentioned on the watch list yesterday, but I saw the opening action where I'm looking to get like a position within the first 5 to 10 minutes. That's typically when low a day is set on these. And you're getting no volume, and then just a random 40K candle swipes the thing up 15%. Like, it just doesn't make any sense. It doesn't have to make sense. It's up to me to try and figure it out, get in where I fit in, and make some memories. But I'm definitely not doing that very well right now. So it's been probably about a week or two. But it is what it is. Show up every day and try and figure it out and grind it out. So my goal for tomorrow is to come into the day with plans and try and trade them well, win or lose. Just come in and try and trade them well. PHUN, I'd be interested in any gap ups. towards the 10 to 1050 range for a fade back to 7 to 8. And what I'd prefer is not to short this thing again, but get a gap down and flush sub today's low a day and shake out all the dip buyers from today. And you've got this big consolidation zone here that if it gets into this high sixes, low sevens, I'd be interested for a backside bounce. And I think there's sufficient enough range back to the upside that it could. Gry, that's another one of those that, like, yes, it's faded well. Yes, I think that there's sufficient range back into like this 140 would be the goal on something like that. It's up from 40s to 160s in that 300% move. So today's volume is 2 million. So it's only traded $1.4 million worth today, which is in that same F-ish basket. It did hold prior day's lows today, so it's put in a couple sideways days. It has closed green today, it looks like. I believe, yeah. It did close green today, so technically today is the first green day, so I'd like to see a flat open, a pull to 80 cents hold, and then a re-break of this mid-80s. But again, like I'd need to see some of these candles, and it's the same thing as F-ish, that you see that swipe and you just need to trust it. Like, sure, if it, like, hindsight, obvious, but if I zoom in to here, so this is exactly what Gry could look like tomorrow, and this could be a pop from 150 to 170s and fade right back. There's just no saying that this is going to continue. So Gry could do the same thing, spike from 80 cents to 90 cents, and you just have to trust that pullback. And without sufficient volume, I find it hard to trust. And like F-ish, I don't really care about missing. It's combining with everything and how I've been trading recently. That's more the frustrating part, not so much this trade in itself. So could Gry work? Yes, but I wouldn't say it's A+ by any means. I'd probably give it like a B-. So it could be a trade, but the thought process going through my head is, am I going to be happier missing the trade and seeing it work, or happier being in the trade and getting stopped out on it and being happy to trade that plan? So that's kind of the balance I'm trading at. I think it's more a decision I'll have to make pre-market tomorrow. See if it's got sufficient volume pre-market. Maybe they put out a PR that gives it some sort of liquidity. Maybe the way it gaps has more of a constructive look than just a one candle wonder. But these are all things that I think I'll have to judge in the morning. Yes, I do have it on my list with GRI, GNPX, LTBR, all those as possible backside bounces. But I think I like GNPX and LTBR a bit more. But I will have GRI on watch as well for a similar setup. News and STEC. Those were drug sympathies. Definitely not news. I'll go over that in a second. No, definitely not. So these ones were drug sympathies on the front side here. They had this was an after hours move. This was technically the day one move in real market hours. This would now be your first red day, your second red day, and now a consolidation breakdown. So resistance is still super close by, like 30, 40 cents away. So I don't think that there's enough meat on the bone to look for a bounce. And I prefer a much more gradual fade. This one has tried to go green, tried to break prior bar highs, tried to hold prior close levels. It's done all the signs necessary to try and bounce. So saying that it's going to bounce tomorrow, I have no triggers that haven't tried to trigger already, and I don't think there's enough range to balance that low win rate with a high enough risk reward. And news, I think, is the same kind of thing where you got that big move, that backside first red day shove into resistance, and it should have bounced somewhere around here. This was more of a breakout watch setup for a liquidity trap than a backside bounce. The resistance is just a bit too close. So if you're looking at something like this where volume profile is all congested right around here, and if you look at something like GRI, volume profile is 50 cents away on an 80 cent name, and something like GNPX, I wouldn't play for a first green day here. I'd need it much closer down to this 150, 160s. So I'd be hoping for like a huge gap down, which would be like an exhaustion gap that I would have enough range to play on the upside. Same kind of thing with LTBR. It's been a steady fade, and prior support is in 7s, and this is down in the 5s. So that's why I don't like those ones and like some other ones over it. I have a question. Have you tracked if a day one runner closes below the open like news, the backside bounce doesn't work? I'd have to pull up my spreadsheet and look. Volume profile has to be under. Let me answer this news one. Let me think about that one sec. So something like news didn't. Day one runner closes below the open. News did not. What was that one from today? It was NXU was the gap and crapper today. So the reason that I think, first of all, the ones that have worked are multi-100% moves. You don't get that a whole lot on day one runners. The highest odds ones are 300% or more on the front side, which NXU doesn't fit already. And for this one to fade, all longs are bagged. So basically, the trader psychology behind it. So like GNPX, for example, where are traders in from? You've got this big volume day, and then it dries up. So on that backside fade, there's not a whole lot of traders involved. Most of the traders are in right in here and in right here off the opening print and here into this after hours squeeze. So basically at $3 plus and at 170 minus is where the traders are. Everything in between there is quiet. It's not going to have crazy liquidity or crazy volatility. Hence why this liquidity has dried up and it's been a steady quiet fader. That's typically where like my day two trades come from, is for those quiet ideas when I'm trading that range that I think should be muted reactions. So with something like this, I now have a support level to play off of and a resistance level to play off of. So when it gets close enough to this support, I like the odds for a trend shift where something like this has gone 1, 2, 3 days without going red. The first time it goes red, it holds red and now goes 1, 2, and ideally a third day, and then look for some sort of bounce. So there's like trends and pivot points that I can identify with something like NXU today. What's the trend on this? Is it has an opening shove and then fades all day. So there's a bunch of volume right here in the 73 cents. So if this breaks below 50s, today's support, everybody who tried to long this consolidation is underwater looking to sell pops. Any shove over 60 into 70 is going to have these opening range shorts and longs for the most part underwater. And there's like, so shorts aren't as on the edge and for covering on that fade. Like they've already shorted this thing at basically 73, 74 cents is the average trade of the day. And it's faded down to 50. So they've already made 30% of their money. So if this fades lower, yes, you'll get that short covering bounce. But when like 80% of the world is long, then that short covering, I think, is met with a lot of overhead supply in terms of longs and bag holders, where something like GNPX, I think that there's still longs holding this from over here that are still in the money and are buying this at a deal. So you get that range and you get the trader psychology, and they both kind of come together to make that trade setup. So to answer your question short, the day one gap and crappers do not bounce as well as the big 300% plus runners. Okay, volume profile has to be under the price level. Yes and no. Basically, on Fish is a great example. If I take off today, right here. So the Fish, this volume profile is up here in this 5 and 6 range. You can see where all the volume has been traded up here at 450 plus. So anything from 450 to 6 is everybody underwater and shorts. So now this thing has faded all the way back to $1, right where it started from. So there's decent likelihood that shorts are going to start covering. Whether there's sufficient amount of them that's going to bring in enough volume for it to bounce, that's up for debate. But now you've got this prior support right here that acted as resistance here on day 2. And the volume profile gives you a hint as to where most traders are. So now once this thing starts going, you can see it comes right into prior support, prior resistance. And so I use volume profile for support and resistance levels. For these backside bounces, I like the volume profile to be above where I'm trading it, like Fish was, up in the 5 and 6s. But I need it far enough away that there's still range for me to play. So something like GNPX, the volume profile down here in the 150s, I see that as support because it had such a big multi-day move. So this can fade to the 150s, and now I have 1, 2, 3, 4 days that show me that this 250 to 260 range is key. So if I can get a 150 to 260 range to play in, that's plenty enough range for me to profit off of. So I kind of use it as both ways, where I like to see volume profile on the extreme up and the extreme down, and then play within that range. It gives me like a defined risk reward. So when I have like these first green days, I think I have like a 77% win rate on that pattern. So I have a 77% win rate. So if I'm going to lose a quarter of the time, then I need to be making, what is that? Like if I had a 1-to-1, I would still be profitable on that setup. So basically I need at least a 1-to-1. So if this thing is pulling back to 150 and I can, risk towards 150 to 120, have maybe a 10 to 20 cent risk, but to make $1, that's that 3 to 5 to 1 on a 75% win rate. That's a positive expected value. So I like it on the extreme ends. So it doesn't have to be under the price. If it's under there with, like you can see this volume profile, how I use it. There's like this gap right here where it's just gone. So I can trade within that range with fairly good edge. So late to the party, we'll watch it from the beginning once you're done. Happens. So, good questions. So you like to have air? Yeah, exactly. Air in between the levels. Exactly. No problem. Base hunter. So it can pop or fade easier. Yeah, the ease of movement is a lot easier, and I have defined levels to play off of. If like even Fish is a bounce short using prior levels and a straight up parabolic spike. Like I know David Hanlon traded this. So you can use it on both ends. I just prefer to be long when they've faded so far off the highs. but you get a straight up spike from 1 to 450, it's bound to have a pullback, whether it picks its direction up or down from there. But the odds of it having a pullback, pushing up into prior volume profile levels, and coming up with a 4x move. So you can use it on both ends. Thanks again. Some great information tonight. Cool. Yeah, I think there was good questions. And reviewing stuff like that helps me as well, because it helps me contextualize and put edge into words. So it helps me trade better. But I think I'd like to leave it there. I think that's a fairly dense video, and I think I went over a bit much. Even my throat's dry from talking like that. I don't know if you guys felt it, but I felt passion when I was explaining that. That backside bounce was the setup that made me profitable. When I was losing for like 14 months straight, and I started just trading this setup, and that month I made those 14 months of losses back. So I have some passion in it. I've tracked it extensively with a few hundred ticker sample size. It doesn't trade as cleanly as it did back in like 2019. 2020, they were like really clean, like was it SES, I believe, way back. What? Can't even go back far enough. This was definitely the ticker. It was back in 2020. CODX. Back in 2020. Where these exhaustion gaps would actually fail. What was that one? APT? Was that COVID one? Like, look at this. Look at this. Oh my God. Like, this is just like, I want to print this out and hang it on my wall. Like, look at this. 5 to 40, massive exhaustion gap, blow off volume, fades from 40 down to 16, gaps and holds red, fades from 19 down to 12. You get a prior day low hold, fills this looking left gap, right where the volume profile is, acts as support, and you get that 13 to 21 move. I bet you if I zoomed in to that intraday, like a 15-minute, it would have some sort of resistance, like these open and close levels right into, like, oh my God, look at that. What did Lake do? Lake, not as clean. We had NVAX. I remember trading this one to the short side one of these days. I don't remember. Might have been that day. But that's the same thing. You get 1, 2, 3 days, gap down, holds red, lower, gap down, lower, prior day low hold, and a bounce. This pattern, like, because I didn't, oh my God, like it's working me up. My God. It's like, I didn't know how to buy these and predict the moves like Roland was doing. When he would see sector momentum, he'd throw a shotgun shot at the wall. He'd buy 3 names. They would all go, and he'd make his millions. And I did not know how to pick those 2 or 3 names out of the 20 that were moving and the ones that were going to make their moves. I didn't know how to do it. So I was restricted because I was too young at the time. My broker wouldn't give me margin. They wouldn't let me do a margin account. So I had to trade on cash. So I was forced to go long. So I'm like, if I can't figure out how to predict these moves, then I need to figure out some sort of way that I can have like a reactive long setup instead of a predictive long setup. Like most short setups are reactive. Like you're waiting for something to run and then you're reacting to that move because gravity sets in on these small caps and fades them back to lows. So with the longs, I felt like I was just trying to pick garbage out of nowhere, and I kept losing and losing and losing and losing. So what I did was I'm like, okay, let me track these multi-day moves that would go on a run, that I would recognize the short setup, but I'm like, shorts have to cover somewhere. Maybe you get some dip buyers in there that see the move and think now it's a good deal. And I would look to buy that bounce, and I started to recognize them and save charts, save charts, save charts. And they all started acting similar. They would all set their low a day within the first 5 minutes. And this happened for like the first 2.5 years. I back tested, and I had like 300 or 400 samples, and they all set their low a day. The ones that worked within the first 5 minutes of the day, 9:35, the low a day was already set. And any sort of strength out of that range I could buy and risk the lows, and it would give like a 28% move on average, and it was like an 82% win rate or something. So I traded them over and over and over and over again. March 2020 came around, and there was runner after runner after runner. I didn't know how to predict the runner, but once they faded on the backside, I was there for that backside bounce. And it worked. It worked for a while. But they're getting tougher as we're seeing. So you put it all together yourself. I thought you got the setup from someone else. No wonder you got so much passion about it. Mad respect. Thank you. I appreciate it. Yeah, it was right around the time when I started trading in the office with Roland and Huddy. And Huddy was exclusively a short trader on multi-day runners. And Roland was exclusively buying gappers, looking for sympathy trades. Huddy was up about 200K at the time, profit-wise. And I came to them with two setups. And it was reverse splits that were fading down to $1. And that was the first, it was somewhat of a predictive long setup, but it was still somewhat reactive because I could identify when a stock did a reverse split objectively and could react to a fade and risk $1. And RSLS was the first one. I think it was 2019, I believe. Yep, right there. So this, at the time, was $1 or close to it, and it put out a reverse split somewhere in here, and it just faded, 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 faded. You buy it risking $1, and they'd put out a press release, and they would go nuts like this. And I identified that. I showed it to Roland, and he's like, dude, this is the setup that he had been tracking and trading for so long, and I had found it on my own, and he was impressed that I had found it. And then I showed them my first Green Day setup, and I had these in two different spreadsheets, and Huddy was like, yeah, you've got edge on it. Swing the bat hard, trade them till it stops working, basically. And those are the first two setups I was trading. Yeah, the reverse splits have sucked because the pumpers won't let them fade. I have no idea why they don't work. I think edge just erodes when everybody figures it out once it becomes mainstream. Same kind of thing with the China pumps. Back here in 2021, this was one of the first ones that I had shorted. And it would go from $100 and within the day was at 10, and within a couple days was down at $3. And they were easy. They never upticked. And now you get stuff like ORKT was the one today. This was a China pump. It was alerted right here. Or was it this day? One of those days. Yeah, this day right here. It was alerted right here. They started churning volume. They just held the bid, and they chopped it around for the next week and a half, and they gapped it down today in pre-market. SSR is now on by market open, so any upticks are hard. You can't fill unless you get an uptick. So you would have had to trust this flush that a lot of times is the trap. and they're just becoming a lot more difficult. So edge kind of eroded on those same kind of way as reverse splits did. HKD. Yeah, HKD, it wasn't that, I don't really want to say like the name got a bad rap, but this wasn't a China pump. Like, it was a China name that was going nuts, but like I was in a million message rooms and this one wasn't alerted. It was like, it was posted as like a hindsight, like, oh my God, we picked this thing at $10 and it's up at $2,000. You could have made this money too. They were using it as like a marketing tool, but it wasn't actually alerted. Like Timmy said, top, that was one of them. It did get alerted and it went to like 200. Right here. This one did get alerted, and iLeg as well. iLeg was the first one that kind of freaked me out right here. 420. I remember it clear as day. 420 was the low a day. That was the price that they were sending out their buy messages at, and they caught it at 420 and ripped this thing. And so many people were shorting these and going bigger on the next one and bigger on the next one and bigger on the next one. And this one caught everybody. But this one definitely changed the game. But yeah, I think it's just the way the market goes. Like, traders come in, come out, and eventually human nature kind of tries to figure out the next hot thing, and once everybody's on the same side, then there's no more edge in that, because now you're not exploiting other traders. And then eventually it comes back into cycle once you get new traders back in the market and old ones are gone, and it the psychology never changes, but I think the opportunities come and go. Anyways, I think that's a good chat. I'm happy with that conversation today. I think I'll post that on Twitter. And I think we got some good stuff in there, despite my lackluster trades from today. But live and we learn. Get better for tomorrow. Thank you, Timmy. Thank you, sir. Yeah, we will leave it there. Thank you guys for coming by. Let's try to get in where we fit in and make some memories tomorrow. I'll try to listen to my own advice. So trade them well, end the week strong, and I'll see you guys Sunday evening for the Monday watch list. Peace.